The new gold rush, the price of gold reaching heights it has never seen. Chief Economics Correspondent Rebecca Jarvis is here with what's behind the surge and whether you should be getting into the gold market. Good morning, Rebecca.
Hello, Michael. Hey, guys. Yeah, gold is getting a lot of attention right now because it is at a new record high, over $4,000 an ounce. That's up about 50% over just the last year. Remember, just this past March, gold traded above $3,000 for the very first time ever. So it's gone up quickly.
Yeah, and it usually goes up when people are worried about the future of the economy.
Yes, and you feel that uncertainty throughout the world right now, throughout economies all over. Investors tend to see gold as a safe place to store money during those times of uncertainty. Gold has doubled in the last 2 years, reflecting the scale of unknowns that continue to hang over major economies, including ours. You have the government shutdown, inflation, the amount of debt that we've taken on with no real solutions to pay it off, lower interest rates, and then that great political uncertainty. You can really think of gold like a financial security blanket for investors. That doesn't mean it can't go down, though, Robin. That's important to remember.
Yeah, but what we were talking about in the break is that, big box stores, you can get them there. And so what is your advice to people if they're thinking about investing?
Yeah, so the big box stores, these big retailers started getting into the physical gold selling business not that long ago. You could buy a gold bar starting in 2023 at Costco. They sold out after the launch. It continues to be a hot item as the price of gold keeps rising. Walmart's also selling gold coins and bars online. Some are priced around $4,200 an ounce. That's a little bit more than where gold is actually trading at, so you're paying a markup there. What you can do if you want to buy gold as a part of your investments is look at ETFs. These track the price of gold. They give you access, but you don't have to physically take the gold because reselling a physical bar of gold is a lot harder than buying a physical bar.
Why so?
Because of the fees that are associated with it. You could go to a pawn shop, you could send it in, but it's not as easy to do that, and you usually pay a little bit to sell your gold.
I can't see going to a pawn shop with a gold bar.
So if you buy the gold bar, you're already down the minute you buy it.
It's kind of like driving the brand new car off the lot. It depreciates almost immediately. The other reality here is while gold is very exciting right now because of where it's been and where it is, that doesn't mean you should put all of your money there. Generally, analysts say 5 to 10% of your portfolio could go towards gold. And again, take a look at those ETFs if you're interested.
I picture somebody like, I got a bar gold.
They don't take gold at Starbucks.
That's what I'm thinking. Okay.
All right,
maybe it's just me.
Yeah, maybe it is just you.